Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 387 on August the 8th, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on EOS Energy Enterprises, Applied Digital Corp, and Rocket Companies, and we discuss three new trades on Ondas Holding Inc., the Silver Trust ETF, and Unity Software. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. And the markets finished the week higher, with the S&P 500 index having its highest weekly close ever by about 1 point. The Dow Jones Industrial Average gained 587 points, closing the week at 44,175 points. The S&P 500 index grew 151 points, ending the week at 6,389 points. And now it's time for the topic of the week. The topic of the week is getting better. I've spent the last couple of days at a leadership conference here in Chicago. To be honest, I wasn't super excited about attending the conference at all, but there are some people that were expecting me to be here, and I didn't want to drop the ball. Now, I love being back in Chicago because this city still feels like home, so I decided to go ahead and attend. And the speakers impacted me far more than I anticipated. One of the speakers talked about being consistent, being boring. Another talked about the various ways we can procrastinate and how to overcome it. Another speaker talked about overcoming challenges and being resilient. I've mentioned many of these topics on the show before regarding trading. The overall theme that's on my mind this evening is becoming a better version of you. The better you become, the better you'll perform. I've spent decades looking for a better mousetrap for finding trades. I've used different oscillators, different moving average combinations. I've used volume profiles and VWAPs. After all of this, I must say, there isn't a perfect indicator. There isn't a guaranteed algorithm that will shove millions of dollars into your account. There are no quick fixes. You just have to do the work. You have to get better, and your trades will get better. You have to continue sharpening your analysis skills and your understanding of options. You have to get better at executing trades when the right time presents itself. You have to get better at managing your emotions and managing risk. The way you get better at trading is through work and becoming a better version of you. I haven't found a shortcut yet. I haven't seen a pill like that one in the movie Limitless that suddenly allows you to become the perfect trader overnight. Keep practicing. Keep refining your technical analysis skills. Keep learning more about options. Keep finding ways to execute trades better, faster. Keep getting better. I'm fired up now about what's to come. So I guess the conference worked after all. So let's go ahead and dive into the review of last week's trades. We're going to start off with the covered call on EOS Energy Enterprises, symbol E as in Echo, O as in Oscar, S as in Sierra, E as in Echo. At the time, the stock was trading for $5.51 per share. I looked at buying stock and selling the August 6th call at 23 cents, hoping for a return of 13% in 2 weeks. Well, shares of EOS Energy grew 86 cents, ending the week at $6.37 per share. The call option we sold grew 30 cents, leaving us with a net profit of 56 cents if we were to close the trade out immediately. Now, that would be a 10% return on capital in 7 days if you were to close the trade out early. Of course, your profit can grow another 16 cents by holding the trade through expiration if the stock expires above $6 per share. Now, if the stock were to head below $6 per share, I would simply follow up by selling another at-the-money call option for a later expiration date, the Monday after August expiration this next Friday. So I will lean towards holding this trade through expiration, but sometimes taking the quick profit is the best answer after all. This was a nice short-term trade. Trade accordingly. Next up, we have the credit spread on Applied Digital Corporation, symbol A as in Alpha, P as in Papa, L as in Lima, D as in Delta. At the time, the stock was trading for $12.52 per share. I looked at selling the August 12 put spread at 19 cents. That could give us a maximum possible loss of 31 cents per spread. Now, shares of Applied Digital jumped $1.68, ending the week at $14.30 per share. The out-of-the-money put spread that we sold is now even farther out of the money, which means this trade is winning. We could buy the spread back for 12 cents, which would leave 7 cents of possible profit on the table. Or, if you're confident about the stock remaining above the break-even point, which is about $1.90 away, then you can capture the entire 19 cents of profit we hoped for at the start of the trade. Either way, this trade is working out as well, so no adjustments are needed. Just make sure you manage it for the most profit over the next few days. Nice work. Finally, we had the debit spread on Rocket Companies, symbol R as in Romeo, K as in Kilo, T as in Tango. At the time, the stock was trading for $16.52 per share. I looked at buying the August 16.5 call spread for 33 cents. That could give us a maximum gain of 17 cents or a 51.52% return in 2 weeks. Well, shares of Rocket Companies grew 31 cents, closing at $16.83 on Friday. The in-the-money call spread that we bought is now even more in the money. Now, we are only 50 cents away from our break-even price, so we're not free and clear just yet in this trade. No adjustments are needed, but it's important to keep an eye on this stock and have a plan in case it moves against you over the next 5 days. I'd certainly enjoy a 51% return on capital for this short trade, but we still have risk on for another week. So far, so good, but don't start counting the chickens before your eggs hatch. I've gotten in trouble with that one before. Have a plan for how you'll adjust this trade or protect the trade in case the stock heads lower. So that's it for the review of last week's trades. We are 1 week away from August monthly options expiration, which will be next Friday, August the 15th. All new trades on today's show will use the September 19th expiration for monthly options in the month of September. So let's dive right in, keep it going. We're going to start off with our covered call. I'm looking at Ondas Holding Inc., symbol O as in Oscar, N as in November, D as in Delta, S as in Sierra. The stock ended the week at $3.55 per share. I'm looking at buying that stock and selling the September 4 call at 45 cents, hoping for a return of 25.35% in 6 weeks. Now you enter this trade by buying stock for $3.55 and selling the September 4 call at 45 cents. This trade makes the most money if stock prices finish above $4 per share. The break-even price on the trade is $3.10 per share. In real terms, the stock purchase will require $355 and you'll collect $45 for selling the option. Next up, we have a credit spread on the Silver Trust ETF, symbol S as in Sierra, L as in Lima, V as in Victor. Stock ended the week at $34.87 per share. I'm looking at selling the September 34 put spread at 19 cents. That could give us a maximum possible loss of 31 cents per spread. Now you enter this trade by selling the September 34 put at 89 cents and concurrently buying the September 34 put for 70 cents. This is a credit spread because we are selling the spread. This trade makes the most money if stock prices expire above $34.50 per share. The break-even price is $34.31 per share, and in real terms, you'll receive $19 per spread that you sell and have $31 at risk. And then our final trade on today's show is going to be a debit spread on Unity Software, symbol U as in uniform. The stock ended the week at $33.25 per share. I'm looking at buying the September 33 call spread for 60 cents. That could give us a maximum gain of 40 cents, or that would be a 66.67% return in 6 weeks. Now you enter this trade by buying the September 32 call for $3.65 and concurrently selling the September 33 call at $3.05. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $33 per share. The break-even price is $32.60 per share, and in real terms, you'll pay $60 to enter the spread, and your maximum gain is $40 per spread. So that's it for this week's show. Thank you guys for listening. Thank you for sending in some emails as well. If you have any questions, feel free to hit me up. Hey, I hope you guys are enjoying these last few weeks of summer. The kids are starting to go back to school. Parents are happy. And hey, we're just a few weeks away from the markets picking up in volume as well. The markets typically pick up after Labor Day, so not too far away. Enjoy summer, have a wonderful weekend, and as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.